Hello, and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host, Daniel, bringing you the highlights and the happenings from around the world. Last week, rising U.S. Treasury yields pressured equities. The Eurozone saw slowing business activity, and Japan grappled with pre-election caution and yen weakness. Meanwhile, China balanced mixed market performance with continued stimulus measures. U.S. stocks faced headwinds last week as rising Treasury yields pressured the broad market. The S&P 500 declined 0.96%, snapping a six-week winning streak, while the Nasdaq edged up 0.16%. The 10-year Treasury yield rose to 4.03%, reflecting the Fed's hawkish stance. Strong earnings from Tesla supported the tech sector, offsetting declines in consumer and real estate stocks. Meanwhile, consumer sentiment reached a six-month high, though the real estate sector weakened, with home sales falling 1% in September from August levels. European markets struggled, with slowing economic activity and concerns over the ECB's rate policy. The Stoxx 600 dropped 1.18%, led by declines in Germany's DAX, down 99%, and France's CAC 40, down 1.52%. ECB policymakers remain divided. Some support cautious rate cuts, while others warn against risking inflation targets. Eurozone business activity continued to contract, with the PMI composite below 50, signaling a slowdown. In the UK, the FTSE 100 fell 1.31% amid weakening business confidence and signs of economic slowing. The UK saw indications of softening economic growth as the October PMI fell to an 11-month low. Consumer confidence also declined to its lowest level this year due to inflation concerns and potential tax hikes. The Bank of England hinted at possible rate cuts in the coming months as inflation moderates. Japan's Nikkei 225 dropped 2.74% amid uncertainty following the recent election and a weaker yen at 151.78 against the dollar. Tokyo's core CPI for October reached 1.8%, slightly above expectations. The Bank of Japan reiterated its gradual approach to rate hikes, balancing fragile growth prospects with consumer impact. Chinese markets displayed mixed performance, with the Shanghai Composite rising 1.17%, while the Hang Seng fell 1.03%. The People's Bank of China continued its liquidity support, maintaining low interest rates to support growth. Industrial output and retail sales exceeded expectations, though deflationary concerns and high youth unemployment dampened enthusiasm. As we look ahead, several major events are set to shape global market movements this week. The advance estimate of U.S. third-quarter GDP, set for release on October 30th, will offer a crucial view of economic growth in the context of elevated interest rates, providing insights into the resilience of consumer spending and business investment. As the Fed's preferred inflation measure, the core PCE price index will offer valuable insights into underlying inflationary pressures just ahead of the November Fed meeting. Inflation data from the Eurozone and UK on October 31st will shed light on current price pressures. informing expectations for future policy actions by the ECB and Bank of England. Japan's retail sales and industrial production reports for September will provide updates on domestic demand and manufacturing strength, guiding expectations around the Bank of Japan's cautious policy stance. China's official PMI data for manufacturing and services will reveal the health of economic activity and the effectiveness of ongoing stimulus efforts. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.